Welcome to the Explainer. So what's the real difference between a professional trader at hedge fund and, well, everyone else? Today, we're going to crack open the playbook of pro trader Albert Suriol and lay out his entire blueprint for you.
So, here's what we're going to cover. We'll kick things off with the core philosophy, the foundation for every single decision. Then we'll dive into decoding the technicals, see how they use a fundamental filter, and even walk through what a typical week in the market looks like. And we'll wrap up with what might be the most important piece of all, the professional mindset.
All right, let's jump right in. First up, the core philosophy. You have to understand this because honestly, if you get this right, everything else just kind of falls into place.
And here it is, the big secret, right up front. Albert says, technicals give you the perfect point, but the fundamentals give you the direction. Let that sink in for a second. Think about it like this. The fundamentals, that's the story. That's what tells you if the market is probably going to go from point A to point B. And technicals? Well, that's just the tool you use to find the best, lowest risk spot to hop on for that ride. Okay, so with that core idea locked in our heads, let's look at how a pro actually breaks down the charts. It's really a system of zooming in, starting big and getting more and more granular.
See, a pro's analysis isn't just random guesswork. It's all about layers. They look at the market through 3 distinct lenses, and they always do it in this specific order to build a complete picture. You start with the overall trend, then you zoom into the direction, and finally, you pinpoint the momentum.
And here's how that works in the real world. Each of those layers uses a different time frame to answer a totally different question. You've got the big picture trend, that's your daily or weekly charts, telling you if the whole ocean tide is coming in or going out. Then you have the direction on, say, the hourly charts. That shows you the current wave you're dealing with. And finally, you get down to the momentum on the 5 or 15-minute charts. That's all about nailing your exact entry point, usually when the markets are busiest, like in the London or New York sessions.
And this is such a brilliant way to think about the difference between the main trend and just a temporary bounce. Albert has this great analogy. He says, if you throw a phone off a 5-story building, it's going down, right? I mean, it might bounce a little when it hits the ground, but that bounce doesn't mean it's suddenly going to fly back up to the 5th floor. That little bounce, that's just a pullback. The overall trend is still down. Big difference.
Okay, so that's the technical side. Let's switch gears and look at the other half of that core philosophy, fundamentals. And we're going to see how pros use them, not just to react to news, but as a proactive, strategic filter.
So a professional trader basically splits news into 2 camps. First, you've got your direct impact news. This is the big stuff, the scheduled events like CPI inflation reports or when the central bank makes an announcement. This stuff hits the market and bam, instant volatility. But then there's the slow absorption news. This is the bigger, ongoing story. Things like long-term inflation trends or geopolitical situations. The market kind of chews on this stuff for weeks, sometimes months.
And once you understand that, it totally changes how you look at the economic calendar. For a pro, it's not a list of lottery numbers to bet on. No way. It's a planning tool. You use it to map out your week. You identify the big events, see which currencies are going to be in play, and this is key, you use it to know when to stay out. When the fundamental story is messy or contradictory, you just don't trade. It literally helps you decide which days you should even bother turning your computer on.
And that right there is a massive shift in thinking. The goal isn't to hunt for trades every single day. The goal is to know which days you have to trade. You're basically using all this analysis to find that 1, maybe 2 days a week where all the stars align, and you just sit back and patiently wait for that perfect setup to come to you. So, okay, we've got the technical layers, we've got the fundamental filter. How do you actually put it all together? How does this work in a real, practical week-in-the-life strategy? Let's walk through it.
All right, so check out this timeline. It's all about being patient and having a plan. Monday, Tuesday, that's your homework time. You're digging into the economic calendar, forming your fundamental bias for the week, and marking up your key levels on the daily chart. Then, maybe by Wednesday, you see the price getting close to one of those key spots. That's your cue to start looking for a precise momentum-based entry. And notice, this is before the big news event. So when that news hits on Thursday or Friday, it's not a surprise. It's the catalyst. It's the fuel that's meant to push the trade you're already in. You're positioning for the chaos, not just reacting to it.
Now, what if the trade starts going your way? Well, that brings up a really important rule for managing your trades: scaling. Albert is super clear on this. He says, I only scale from intraday to swing. What does that mean? It means you can take a really precise, profitable day trade and let it morph into a longer-term swing trade, but only if the fundamental reason for the trade is still solid. You're letting your winners run. The crucial part is what you don't do. You never start with a big, sloppy swing position and then try to micromanage it down to the minute. That, he says, is a recipe for disaster.
Okay, so now you have the strategy, the whole blueprints, technicals and fundamentals. But you know what? That's maybe only half the battle. Because the real question is, do you have the mindset to actually execute it? This is where you have to make a huge leap from thinking like a retail trader to thinking like a pro.
So let's talk about it. The final and arguably the most critical piece of this whole puzzle, the professional mindset. Honestly, this is the wall. This is what separates the amateurs from the institutions.
So, what are we talking about here? Well, first, it's about patience, like extreme patience. Pros spend way more time analyzing and just waiting than they do actually executing trades. Second, self-control. They've learned to resist that dopamine hit that comes from overtrading or revenge trading. Third, and this is a big one, risk awareness. Their number one job is to protect capital. An investor needs to feel safe giving you their money. And finally, it's about having a truly well-rounded knowledge. Understanding the whole global economic picture, not just a few patterns on a chart.
And this really gets to the core of how institutions think about risk. Let's say a hedge fund is looking to hire. They have two traders. Trader A made a 30% profit this year. Pretty great, right? Trader B only made 15%. So you'd think they'd hire Trader A. But wait, look at the risk. Trader A had a gut-wrenching 30% drawdown to get that return. Trader B, only a 10% drawdown. Who do you think the fund hires? They hire Trader B. 10 times out of 10. Why? Because steady, predictable performance with low risk is so much more valuable than a high-risk roller coaster ride.
And all of that leads to this one final, incredibly powerful piece of advice. He says, remove trades. It's the best advice I can give. And what he means is that your success as a trader isn't really about the amazing trades you make. It's about all the bad ones, all the meh ones that you have the discipline to just not take. That's where the real money is saved and made.
So I'll leave you with this to think about. Look back at your last week of trading. What's the one trade that you know deep down you should have just removed, the one you shouldn't have taken? Just thinking about that and being honest with yourself, that's your first step toward trading like a professional. That's all for this explainer.